but the store was too full. And that envelope had a letter in that scarcity room. Back in silence is where it all began falling apart. I was always a clumsy speaker, and we couldn't find one another in that scarcity room. Mark my words, I say I'm guilty of no poetry. I was working, I confess, see the courage in her eyes in that scarcity room. There were words of disagreement, but we talked to find the answers in a mutual disposition in that scarcity room. How can I find the reason to love you when I don't love myself?
Good afternoon. Thanks very much for coming. We will crack on because we are on a bit of a tight timeline. So we've got a 45-minute slot now on the investment opportunities in Africa's transport and logistics sector. This is going to be a panel session, and the moderator is Sarah Whitten. She's the regional manager for financing and implementation for the US Trade and Development Agency. So without further ado, I will hand across to Sarah, who will moderate this session and introduce the panelists. Thanks very much.
Okay, great. All right, well, I think we've got the after-lunch slump happening, and I'm sure people will trickle in, but we'll try to keep it upbeat and exciting. So today's theme for panel today is Moving Africa Forward, Investment Opportunities in Africa's Transport and Logistics Sector. It was Napoleon Bonaparte that said, amateurs discuss tactics, professionals discuss logistics. And though things didn't end quite well for him, he certainly appreciated the critical nature of logistics in strategy. We also, see logistics as really being a competitive edge in business. We've seen retailers such as Walmart essentially crush their competition by getting logistics efficient and getting it very efficient and right. So what we want to discuss today is about transport and the different businesses that our esteemed panelists have in their respective markets across the continent. I think today's session is one of the few today that focus less on capital markets and the macroeconomic environment, and so we're really excited to talk to the entrepreneurs who are building businesses within the continent and the trials and tribulations of your various journeys. So with that, we will do some brief introductions of each of the individual panelists, and if you don't mind going into a bit of a background in regards to the specific businesses that you look at. So we'll start with Matthias.
Thank you. Good afternoon, everyone. Thanks for having kept the after-lunch slot for entrepreneurs. That's a strong message. I'm basically entrepreneurs. I've basically found a company called AFSIC, which is a leading classified marketplace across Francophone Africa. My company has been sold like a few months ago by a company called AutoCheck, so basically I'm representing today. So AutoCheck is building digital infrastructure to help and to support people in buying a car. Across Africa. So that's what we are doing. The two pain points that we are trying to solve are the first, the trust in a car. That's why we are checking, verifying cars into like 150 checkpoints. But also more than that, we are offering financing solution for people to acquire a car across Africa. What makes us different? I think there's different things, but I think what is most important for us is we are offering all-inclusive package when it comes to buying a car, meaning the loans, the servicing, the insurance, mainly. So that's what we are offering. We're also operating across Pan-Africa. So we are operating 7 markets from Nigeria, Ghana, Kenya, Uganda. With the acquisition of AFSIC, we are now operating in Francophone Africa, meaning Benin, Togo, Senegal, and Ivory Coast. And more recently, we've made an acquisition in Morocco. So we are opening Northern Africa. So that's what we are doing presently.
Great. And over to you, Omar. Omar is with Trella, the CEO of Trella. Please introduce yourself.
Thanks. First of all, thanks for coming and thanks for having us. My name is Omar Hagras. I'm the co-founder and CEO of Trella. So think of Trella as the Uber for trucks, in which case we aggregate between demand and supply. Demand in this case is our shipping lines or fast-moving good companies, and supply are truck drivers who are looking to utilize their trucks. We operate in 5 countries, and we're launching more within North Africa and the GCC region. We are a Cairo-based company. We're very proud to say that everything is built in-house. If you ask us about our vision, we say today we move things on trucks, but tomorrow we want to move things on ocean freight and air freight. What happens in the future, in the meanwhile, is that we're building the infrastructure that eventually enables us to integrate, for example, with ports, with shipping lines, with airplanes, and we're building a warehouse network wherever we operate so that you can start having everything fully integrated. We started adding new services to our offering to get ourselves a step closer to our vision. So right now, we have an e-commerce platform, and I'll explain how this fits within our business model, and we have a financing solution as well for our truck drivers. So you come as a truck driver and you get access to demand, you get access to financing solutions, because usually it's very hard, it's a very working capital or cash intensive business for you to operate. And then we enable them to buy all their trade tools, whether these are tires, lubricants, batteries for the truck maintenance, through an e-commerce platform. So as a truck driver, we want to make sure that we're closing the loop within our within Trella, so that those partners can actually enable and have a good business. So that's it.
Great. Well, thank you for that introduction. Before we move on to Simon, I'd also like to invite Michael Okarej, who's understands in the audience and one of our panelists today, to please come up on stage. Please join us. And with that, I hand over to Simon from Ox Delivers.
Afternoon all. I guess we couldn't give the bankers the afternoon slot because they're too good. They're professional lunches, aren't they? Entrepreneurs who have to get up and work for our business in the afternoons. So I'm Simon. My background's in automotive, spent the last 20 years developing vehicles of all shapes and sizes. And at Ox Delivers, we're in the business of the logistics of business. You know, the bit that everybody hates, right? From when the person made it or grew it to when it goes into a shop or when it's consumed or eaten. And we fill that gap, specifically working in emerging markets in rural contexts. So our customers are typically smallholder farmers moving anything from 50 kilos of potatoes upwards on a pay-as-you-go basis, an on-demand basis. And to do that, you need to have a decent truck, right? Because the majority of the roads on the continent are dirt roads. And we also want to go EV. We're going to go EV because EVs are cheaper to operate and cheaper to maintain. So, and that's what matters in the logistics business. It's the cheapest way of doing things. So we have our own EV truck, which hopefully you'll have seen on the way in. If you didn't see it, when you go out, look for Big Ben, and there's a truck in the way. So that's us.
Great, thank you for the brief introduction. And then over to Michael Okarej from Pick Me Up Technologies, the CEO.
Oh, thank you very much. It's actually Okarije. So I'm Michael Okarije. I'm the CEO of Pick Me Up Technologies. We are based in Nigeria. So Pick Me Up actually is a transport technology company that connects drivers to passengers, and the drivers pick the passengers on our behalf and take them to their destination, just like Uber. So we are largely focused on the large unserviced market in Africa. So, but right now we are also rapidly evolving into a super app that will allow our users to be able to eat, deliver packages, pay for their daily essentials through one Pick Me Up app to give convenience to our consumers. So that's what we are building for right now.
Great, thank you so much. So I think all of us are very much familiar with the rapid rise in disruptive technologies in the transport and logistics sector globally, with the likes of Uber being massively successful. Given the conference here is focused on Africa, I'd love to understand what the unique challenges of operating in disruptive tech in transport and logistics has been across the continent, and what your businesses have done to sort of overcome some of these hurdles that you're seeing in the local markets. Over to you, Matthias.
I think the biggest challenge we are facing as entrepreneurs in Africa, it's clearly access to talent. It's mostly human resources acquisition in a way, recruitment, and to keep talent in our company. With COVID happening, I think the competition is now worldwide. Good talented developers in Nairobi or in Lagos can now work for any US company with US salaries. So I think this is the biggest challenge we are facing, is recruiting and retaining talented devs. That's one. Also, the middle management and the salespeople is also a challenge to train them, to keep them, to challenge them. So that's for sure the biggest challenge I'm seeing right now.
Omar or Simon, I'd love to also pick your brain about the enabling environment and sort of regulatory challenges, if you've seen any across the continent in this space.
I think the first thing I'd say is there's actually a really big opportunity in the space, because there isn't the same barriers that you see in say, Europe. If you take transport, obviously we're talking about transport here, but today in the West, everyone buys cars and has one sat on their drive. So the marginal cost of going and getting a takeaway or whatever is really low. It's a really like, you've already got this car that's already depreciating, you've paid your insurance on. Whereas when you step into Africa, you don't have that existing pattern of behavior of owning a car. You don't have the existing capital already sunk. So actually, my view is kind of Africa's got an opportunity to leapfrog. It's like in payments and banking and stuff. We don't have the same established way of doing things, and therefore you can switch straight to a new model. And customers are really keen to do that. So it's actually an opportunity to not have that infrastructure in place.
And would you say that the public sector has been welcoming of these innovative technologies in the markets that you operate?
I think for us, we're based in Rwanda, and it has a general reputation of being really positive. We were fortunate, we had an e-mobility company in Boda Bodas ahead of us, so there are incentives there. But I think certainly from an EV perspective, there's a lot of wins in place. In terms of the biggest cash outflow is obviously oil in most countries, and going EV using locally generated energy is a massive opportunity for governments. And I think some of Rwanda's quite forward-thinking, have seen that, but others are following along behind.
Absolutely. Matthias?
But if we go to the regulation, I mean, for a part of Africa that I know quite well, which is Francophone Africa, regulation is quite an issue for the companies. We've seen many companies entering into the taxi business, for instance, in Cameroon or in Ivory Coast, and they were kicked out of the market because there is influence behind, there is cash behind, so they don't want to see newcomers entering into the market. So that's regulation for transportation. We are on our business seeing also another type of regulation, which is the importation of cars. The rules are changing. They must be 5 years old, less than 5 years. Then there is a different type of car that you can drive to make a taxi. So regulation is difficult to understand and to adapt as a young company. So regulation, I think regulation, payment, and HR are probably the biggest challenges that we are facing as a company operating across market. But also markets are very different. Nigeria is very different from Ivory Coast and from Kenya. So you cannot really say this is the problem. There is local problem, local adaptation to make.
Right, and certainly I think it helps to drill down at the per country level because of the vast differences in each location. Omar, I'd love to also get your insight, having worked quite extensively at Uber, maybe sharing some of your experiences working with them and how you've adopted that into your new business model.
Sure thing. I think if we are to look at the challenges we're facing, I'd segment this into four. So one is infrastructure challenges, and the second piece is more on the regulation and the trade agreements between African countries, and then 3 is actually access to talent. So I think it's a common problem for a lot of the companies and startups operating in Africa, and then 3 is access to capital, whether it's debt or equity. Both of them are still not as easy. And obviously with everything happening, it becomes a bit of a challenge. So if we get into the infrastructure challenges that we see, a lot of people usually think of infrastructure as road infrastructure or port infrastructure, but there's also software infrastructure. So if the software or the technology is not up to speed in some of the markets that we operate in, then it's hard for the tech adoption to start kicking in. And it's hard for companies in general to bring in a lot of innovation. One thing we've been seeing that's quite positive these days is that you have a lot of investments coming in Africa, particularly on the road infrastructure and the ports infrastructure, to enable these economies. And think of it this way. It's very, very hard for companies or economies to grow if the trade infrastructure is not properly built or is not up to speed. You can grow your GDP as much as you want, but you won't export because you don't have a functional ports. On average, it takes 3 to 4 days to load or unload a truck in some of the markets in Africa, but it's not as easy and it takes on average 2 to 4 hours to do that in Europe or in the US. So solving some of these infrastructure problems is going to be super important. And then the second piece is on the regulation piece. So there's a lot of trade agreements now happening between countries and governments in Africa, which is great, but a lot of it needs to be intact as well. So some of the challenges is that you can have a load going in from one country to another country, but then you have the truck waiting for a few days to enter the other country. So facilitating this as well can enable a lot of the trade between countries in Africa. The third piece is access to financing. I think Africa is one of the continents that is starting to get a lot of money from foreign investors, but it's still not where we want to see it. And one of the things as well that has been happening is small businesses do struggle to get access to local debt. And if you don't get access to local debt as well, this means that you're going to grow very, very, very slow, especially if your business is depending on a lot of working capital financing, which is our case. The last one on talent, I think it's a pain, but we've also, and I think I have a slightly different opinion here with, there are big companies launching in Nairobi, for example. Some of the largest tech companies in the world are launching in Nairobi. And it is a problem, actually, that a lot of the engineers now are migrating to these companies because they're getting paid, which is definitely true. But if you think of it long term, I think this is actually good, because these guys are going to learn from people who have built companies before or people who have seen how to build companies before, and then start transferring this knowledge. So there will be a hack around it somehow, and I think companies are trying to figure this out, but that's obviously a challenge we see.
Right, thanks. And you've covered quite a broad range of topics, including sort of infrastructure challenges, hard infrastructure in many of these countries, regulations, foreign exchange challenges. Michael, I know that you operate in a market that has quite extensive foreign exchange challenges. I would like to get your insight in regards to how you've managed to navigate that environment in your market with Pick Me Up.
Okay, we've managed to navigate properly because we know the market very well, like from Nigeria, and we've been able to tailor the experience a lot more better than to the consumers, better than our competitors, like the bigger players in the industry. That's because we know the market very well. And one of the, let me see, the reason for our success as well is because, as you may know, there have been issues between drivers and the other competitors in not just Nigeria, in Africa, and in even some emerging markets, ranging for higher pay and better benefits and all that. So we've been able to give drivers better welfare packages, and that has really helped us to get some huge market shares in the underserved markets. But although there are still some challenges, like rising cost of inflation, then devaluation of the naira, and so on and so forth. So there are a lot of challenges, but being that we've been able to, we grew up in the system. We have been an entrepreneur all my life, so I know how to navigate the terrain very well, and we've been able to build products for the drivers, most especially, that makes them to see our products, because other competitors were not built with emerging market in mind. But our product was built with emerging market in mind. Take, for example, we built a digital wallet that allows our drivers to top up at will and indirectly paying themselves, unlike our other competitors that they have to wait for weekly payout of their money, right? So, and that's a huge challenge. So right now, take, for example, if you land in Lagos today and you request for, I don't want to call name, you request for cab, the first question the driver will ask you is it by card or cash? And when immediately you say it's by card, it cuts off it cancels the ride, because he knows he's not going to get his money.
But certainly, sort of payment options. I think
He knows he's not going to
really
get his money within almost immediately. So we've been able to solve that problem for our users. Thank you very much.
Sure. Someone's trying to get a hold of you on all of your devices. So, I mean, here we've got the opportunity to engage with a broad array of investors, and we've heard a lot about the challenges that as entrepreneurs, you know, across the continent, there's a whole host of uphill battles that you would need to face in order to scale your businesses. What would you want to communicate to the investor base here in regards to what the opportunities are in this sector across the continent, and if there's any sort of takeaways that they should be looking at for places that they should be focusing their investment capital?
I can take this. I think one of the things we've been seeing recently is that there is good flow of capital coming into the continent. But as I said, this is still not equally at par with other emerging markets or other emerging continents as well that are happening here. But one of the things that one of the things we've been seeing that has been actually working very well is that there are industries and there are business models that operate well globally. So you find a lot of the large funds or the very big funds in Europe or in the US who, said this industry works well, unit economics makes sense, and then they start fetching companies that actually do invest in that area. However, this is not the case with a lot of other industries. So you have some industries that has proven success in Africa or in other emerging markets, and it's doing that, but that's, let's say, 5% of all of the industries. One of the things that would work is to actually start looking at Africa long term. Africa is extremely underinvested. Africa, its facts and numbers, has the most potential to outgrow or to grow and get decent returns for investors on the long run. What happens is if you look at Africa as a continent where you're going to invest $1 and expect to exit in 2-3 years, that's probably not the right way to look at it. And if you look at Africa that you're going to invest $1 and then you're going to double down on it in a couple of years and then you're going to start expecting returns in 10 years, then maybe that's a more positive approach to look at it. And there is room for growth, and I think everyone in this room agrees on that. And we just need the right infrastructure to do that, in which case capital is one of them.
And how do you overcome that risk perception? Omar, I do understand that you successfully raised the largest seed round in Egypt to date, so perhaps you can share some of your learnings as a part of that process.
Right, that's a good question. I think, so in total, I think we've raised $55 million. The money that we've got in our last round came from a company called Maersk. So for those who don't know Maersk is one of the largest shipping lines in the world, if not the largest. The way Maersk look at their investment is actually very much in line with the way I just mentioned it. So They understand that for their business to work efficiently, they need access to trucks, they need access to software that operates within the ports, for instance. So they've said, okay, we're going to find the best companies that does that in those regions, and we're going to invest in them. That's how we see this, honestly. We see this, a lot of the industries that work, you can get access to capital, not just from private equity investors, bankers, or venture investors. You can also go to corporate VCs or corporate funds that actually do enable a lot of these investments, or do a lot of the consolidation and M&As that are happening, and thinking how your company or how your firm or how your portfolio companies, in the case of a private equity that has a lot of companies, can start working together to enable each other. That's a very positive way of thinking about it. There are risks, but there's always risks in a lot of countries. The way I'd like to look at this is, look where we've come from. So always look back. If there are improvements and things are moving in the right way, then this means that, yes, we're getting there. Might sometimes seem slow in some countries, but overall, I think it's net positive, that, like we say in Africa.
Sure, and I would actually wanted to flick this question to you, because I know you've got experience, Matthias, bringing a strategic investor on board, and it's an interesting point that you raise, Omar, because certainly the strategic investors are very much aware of the landscape across the continent and would like to complement their portfolios in sort of the more traditional transport and logistics offerings that they provide. So Matthias, would love to hear experience on that too.
I think that there is a message I would like to send to investors. It's have a look to the unit economics. I think that's where the truth is. You have experience of different geographies with different unit economics, but I think what it makes truth is really the unit economics. If it comes from like cost of acquisition of a customer, lifetime value of a customer, CRM system that are increasing the lifetime value or the revenue per unit. I think this is really where the discussion should be with investors, because definitely the demand is booming. When it comes to buying a car in Africa, I think there is like 44 cars out of 1,000 people owning a car, and on average worldwide it's like 180. So the room for growth is massive. So have a look to the market potential and have a look to the unit economics. Then we could find a good valuation, knowing at the end of the day the last question would be exit. That's the question. That's the question for entrepreneurs. That's the question for investors. And then we need to have like successful exit to show investors that your investment's worth something in Africa.
Actually, on that point, it's a very good point as well, because I think some investors do look at Africa as, yes, there is potential. However, there's not a lot of exit opportunities. So if you say I'm going to IPO, then the second question would be, where are you going to IPO? And this is where I think there's a lot of government involvement and a lot of government work that needs to be done, so that also the capital markets within those countries, the local capital markets within those companies, can actually enable a fast track or a track for companies to IPO, for example. So exit can come in many shapes or form. Right now, mainly in consolidation, but there should also be rooms to look at how to enable capital markets as well.
Right, and I mean, I guess as we currently stand, it's a very small handful of countries where sort of the capital markets are robust enough for a local exit to occur. I'd like to change tack a little bit and ask a question to Simon. One of the assumptions that Matthias made was in regards to demographics and the increase of potential car purchases across the continent, and I understand that you've got a different view in regards to how demographics and affordability plays into usage of cars and transportation. Would love to understand what you think the future holds on the continent in that regard.
Yeah, I think interesting to see is hearing the stats on car ownership per 1,000 people. Like the UK is about 500. The global average 180. As you said, there are essentially not enough vehicles on the continent. Right? Whichever way you measure it, there just aren't enough. And what that means is it really stymies opportunity. Like we had the most extreme example we had is we were moving fish, and they didn't go fishing until the truck turned up, which is like the least efficient thing you could do. The truck was sat still for hours, but there's no point going fishing if there's no truck, because without a truck, all you've got is a pile of smelly fish, which is worse than not having any fish at all, right? So I think we can, there's a real opportunity, as I said earlier, to look at truck ownership, to look at truck operating in a different way to the way we do it in the West, and actually manage these assets on an on-demand basis. Like today, cars in the UK sit there 97% of the time. It's just a complete waste of resources. Whereas if you can build a sharing economy, if you can fill that truck with many different people's stuff, you get much better asset utilization. And it also, really importantly, aligns the businesses and the consumers around going green, because we know EVs are cheaper to operate and cheaper to maintain, cheaper to fuel, but the challenge today in the UK is it's more expensive to buy one, right? So getting people to buy them is really difficult. But whereas in a on-demand basis, those two things are aligned. Both the companies want to go EV, but so do the customers, because it means lower prices.
Michael, you also operate in the sharing economy space. Where do you see the future going forward? There's a lot of talk and excitement around EVs across the continent, but certainly with electricity challenges, how feasible is that truly in the near future?
For Africa, feasibility is still very low because the adoption is still very, very low for EVs. For EVs specifically, it's low, but for conventional ride sharing, it's a huge, huge market. Hello?
Yeah.
Can I politely disagree? I think, yes, today there are very few EVs on the continent, right? But actually, they're perfect for those operating conditions because you need to essentially not maintain them. And I know you've got to put energy in them, but the great thing about EVs, particularly within the logistics space, is the demand. And that intensity of demand drives the economics for the power providers.
Okay, the reason why I said it's still very low because power is still a major problem in our continent. Nigeria, for example, we are still grappling with power. We've not been able to solve that to date. So if you bring your EV vehicles, how are you going to power them? So that's where the problem is.
This is the perpetual joke about charging your EVs using a diesel generator, I suppose, which very much defeats the purpose. But Simon, I know your business focuses on EVs, and certainly in terms of the topographical challenges and the distance-related challenges across the continent, oftentimes you have major cities that are hundreds of kilometers between each other. How do you build the charging infrastructure to get around that? And if not, are there other solutions to get around that?
So our focus is much more on local logistics, so first and last mile. Connecting small producers with markets and so forth. So today there's no point trying to send an EV truck halfway across Africa. That's not going to work. Tesla is about to roll out the Semi. The first ones arrive with PepsiCo in a month's time. So EVs are coming for the large scale. But the majority of people, 650 odd million people, live rurally in Africa. Typical transport means are bicycles and carrying stuff on your head. So there's a massive market there for relatively local logistics. Our trucks are doing a couple of 100 kilometers a day. It's not huge distances. So at that level, it really is viable. The other point I make is, the number one import from a cash point of view is oil, right? All the fuel burnt in Africa is imported. That is a massive drain on the national economies. All the energy Africa needs can be generated on the continent. So you're replacing a net outflow in cash with a locally generated taxable energy source. So is it there today? No, of course not. But the great thing about logistics is it turns sunshine into cash like next day, which is much more sustainable than, say, household electrification, where you might get $1 a month revenue out of a household. Like, you're talking about hundreds of dollars a day from a EV depot.
Sort of a different tangent here in regards to the competitive environment in some of the countries that you operate in. Certain of the larger logistics firms, the more traditional ones, sort of protect their industry in many ways, and I think it makes it difficult for new entrants to operate successfully in these markets. I'm wondering if any of the panelists have had experience with that happening in their markets, and how you've kind of engaged with the traditional players in that space.
I'll go first, and I'll let you jump in, Omar. I guess our approach is we're primarily serving people who today wouldn't use motorised transport. They would use bicycles. They might use motorbikes, and therefore we're kind of not coming up head to head with the existing players. And the other element is we employ our drivers, and they're members of the local community. Their job is to go and source demand. So we're kind of approaching it from a local point of view rather than trying to come in to compete directly with the existing players who are serving generally the larger businesses in the sector. I don't know your experience.
So I think some of the challenges we're seeing are actually a little bit different, and it's not necessarily coming in from large transporters. It's actually coming in from small, very, very, very small transporters, and this is related to paying taxes, for as simple as that. So if you're paying your taxes and you're abiding by everything, and this is what we are doing, then you automatically have a 20% pricier option for the customers who won't necessarily work with you and will choose the cheaper option, which makes sense for them. But this has been, I also, the reason why, like, I'll also be giving some of the solutions that are happening so that I can also highlight that these things are known and the governments are actually working on them. So in Egypt, for instance, you have a mandatory electronic invoicing system that has been rolled out to the entire country in a superb less than 2 years, and this problem is now sort of non-existent because basically all companies now, it's a blockchain technology, all companies are using this software to onboard their customers and have all the invoices in it, and now the government can see all of that. So this has been a challenge. It's not yet a problem that we're seeing in some of the markets. In regards to transportation, one of the perks of what we're doing is that it's an extremely fragmented market, and consolidating this market actually gives you a big advantage over the largest transporter in the country. So we're technically the largest transporter in all our markets now because we have access to all these transports and we have access to all these loads, and our job is to make sure that we're matching that.
I see you were nodding in agreement.
Yeah, I mean, it's not really about transportation, but it's more about like competition in our markets. Once you're becoming a good company, like a big company, then you're attracting funds, then your competitors are non-formalized companies that are cheaper, that deliver a quite good level of service. They're under the radar, they don't pay tax, no VAT, nothing, and they are much more competitive. And as you mentioned, markets are very fragmented. So once you're becoming formalized, then your competitors are more like the small one than the big DHL or UPS, because they are delivering a service much cheaper than you, and they are able to really customize their offer. So you have two types of competition, like the big players, but also the small one, and I think that can be true across all verticals or businesses in Africa.
Great. I'd like to see if anybody from the audience would like to ask questions of the panelists, and would open the floor to any questions.
So I have a question for you.
I actually have a question for you.
Okay,
so
we're making
we're going to do it that way.
So how big do you want to become? How big? What is the ambition of because you've raised a huge round, you're operating in 5 countries. What is the final ambition? Accept, exit, and so on?
Yeah. Whenever we think future, at least for me, we don't obsess about how we're going to exit. I think if you build a durable company, a sustainable company that can go on for years and years, I'd actually love to grow this company to other borders. So the way we look at this is we look at ourselves as a fully integrated supply chain company that operates preload. So when I say preload, this is probably in a warehouse or coming in from an agricultural land until your doorsteps. So first mile, mid mile, and last mile, and we do that through trucks, large trucks, small trucks, motorcycles, and eventually ships and planes. So one day.
The full value chain.
One day.
Yeah. Omar, you had a question for Simon as well.
Yeah, I do actually have a question for you. And what are the biggest challenges to that from what Michael has said? Some of these markets don't have access to energy or sufficient access to energy. Do you see this actually as a challenge, or can you generate somehow your energy in a way?
So sure, it's a challenge, right? One of the reasons we picked Rwanda as a starting point is the grid is pretty good there. And actually what you find is there's a surplus of energy because it can't be consumed, right? People have put in hydropower and other infrastructure. There's more power production capacity than there is actually consumer. And the great thing about an EV depot is it's high enough density from an energy consumption point of view that it makes economic sense from a power company point to put you in the capacity. And so what we kind of see in the medium term is that our depots will act as base demand for energy companies putting in mini grids and other facilities, because where we want to put a depot, right, is where there is demand for stuff to be moved. There'll be power there, so then you can start building local businesses. And what you end up, whenever I talk to energy companies, they're always talking to me about productive use of energy and how they're going into productive use of energy. And it's like, transport is the most productive use of energy that you can come up with. You generate energy in one day and you generate cash on the next day.
Follow-up question.
I actually also have a follow-up question to that. Maybe it's the same question. In regards to the power generation and the installation of mini grids, are you doing that through partnerships, or are you bringing that in-house?
No, we'll definitely do that through partnerships. There are plenty of people trying to do power, right? It's a well-funded sector. We regard ourselves as their ideal customer. Long-term, stable demand, high amount of energy.
All right. So for Trello, for example, we operate in large trucks and light trucks, which is where you're playing. Why? And I don't mean like I'm asking to know more, but like, why would I get a truck from your company and not get a truck from, I don't know, General Motors, for example?
So all the trucks in the world are focused about being sold at a margin, right? That's your job. I worked in car making for 15 years. You have to make money the day it rolls off the dealer's lot, right? And that means you make shortcuts all over the place. You will not spend a penny if it only costs your customer. If it costs your customer £1, you might do it. But if it's 10 cents, there's no chance. So when you start thinking about designing a truck to operate on demand, you think about it very differently. So, for example, we've got a big Industry 4 project with Coventry University, where we can monitor the vehicles, and our approach is basically managing that asset over its lifetime, particularly when you get into EVs, right? The most expensive thing is the battery. If I was a car maker, I wouldn't care about the batteries apart from a warranty if it blows up. From our point of view, we monitor what our batteries do. We can change the calibration on the battery to see based on what's really happening. If you're getting overheating events in a particular location, change the calibration so it does something different. And that's worth stuff to us. And we will also provide trucks to other people running similar logistics businesses, because we see that as a big opportunity. But it's designing a truck for operation and monitoring it rather than designing a truck for sale.
We're ready for you whenever you come to Egypt.
Excellent. We've already got a team in Egypt. Quite a few of our team are based there. So.
Great. So we're nearing the end of our session, and again, given the sort of opportunity for the entrepreneurs to speak to the investors, are there any final thoughts or takeaways that you'd like to communicate to the investors we have in the room before we close today?
I think I'll pick up on the point you made about payouts. I think what's really key is building technology solutions that are a fit to the local market and what is needed. It's really easy for people to pick up a technology that's worked in the US and go, right, we're going to do that here. But there is always adaptation required. Daily payouts is a really good example. If you're prepared to think laterally, and if you're prepared to think differently about technology, there's a huge amount of opportunity for taking ingredients, giving them a twist, and finding a solution that really works.
Well, my advice to investors is that in Africa, one size does not fit all. So what works maybe in Nigeria and Ghana may likely not work in French-speaking countries like maybe Cameroon and so on and so forth. So when coming to the African continent, they should have an adaptable mindset. And that I would say they should pick a key. One of the key options they should also pick is to partner with incubators, tech hubs, and investors that have already been operating in the African continent for a long time. And I think I will end with maybe 5 ways that the African continent is just too attractive to ignore.
That's great. Thank you so much. You done? Okay. Any final words or? Yep.
Yeah, the last word, it's about like the way investors are seeing the time in Africa. I think you should be a bit patient because we are not only running companies or building companies, we are solving big problems, and we're also structuring infrastructure. So that's a lot of work on entrepreneur shoulders. So we should have maybe a sensitivity of time, which should be a bit different than like the 3, 4, 5 years exit. It requires time to build companies in Africa. There is no like clear model that can fit all markets. So that would be the message. And we know that the environment is quite shaky right now. So that's very important that people have this in mind.
Certainly the importance of patient capital. Thank you all for joining us today, and that closes our session.